Welcome back, everybody. Really excited to introduce our next panel here with Mark Kunkel and Mike Fitzgerald. We're going to be talking about why I chose to take money outside of Silicon Valley. I'm going to pass it over to these guys. Thanks for joining us. Really looking forward to what you have for us today.
Yeah, thank you.
Good to be here. All right, Matt. Good to see you.
Good to see you.
Glad we've got some time here with the audience to talk about this. Let's just start with some real quick backgrounds. Why don't you introduce yourself and LogicGate, and then I'll do the same.
Sure. So hi all. My name is Matt Kunkel. I'm one of the co-founders and the CEO at LogicGate. LogicGate is a SaaS company that helps organizations automate their regulatory risk and compliance activities. Sounds like a super sexy space, and it is. So I came from the management consulting space, spent a decade there building custom regulatory risk and compliance solutions for large organizations. That's where I cut my teeth and got my chops in the technology world and in the GRC space. Saw that there was a big gap in the marketplace for how organizations were using technology to automate these back office compliance and risk activities. And then took two of my other co-founders and started this company called LogicGate about 5 years ago now, a little over 5 years ago on the journey.
Excellent. Thanks, Matt. And my name is Mike Fitzgerald. I'm a founder and partner at a venture studio called High Alpha. We're just down the road from Matt. We're in Indianapolis. And background of myself and my co-founders was we were previously with a company called ExactTarget, which is a marketing tech company that grew up right here in Indianapolis and went public back in 2012 and was sold to Salesforce a couple of years after that. So we invest in and build B2B software companies. That's kind of our swim lane. And we were real fortunate to get connected to Matt and his team a few years ago, and are very happy investors. So excited to talk to Matt a little bit today about his journey and fundraising and see if we can draw some good nuggets out of that. So Matt, let's kind of jump in here. Total LogicGate's raised about $35 million. Maybe take us back and let's go back to the early days and just share with us some of your thoughts about decision to raise capital. How did that happen, and what were some early thoughts about lining up your supporters and people who are going to back the company?
Yeah, so we founded LogicGate back in the summer of 2015, and for the first year we bootstrapped it. Like we didn't take salaries. I think a lot of founders do that, right? And then by happenstance, got into this program called TechStars. And we went through TechStars in the summer of the fall of 2016 in Chicago. There's some great stories around that. But when we went into TechStars, part of it is they give you a $100,000 note. So that was the actual first outside capital that we took into the business. And really, when we started the business, we never thought, it wasn't our anticipation goal to say, hey, let's go raise a bunch of venture money there. It kind of just matriculated and happened that way. And then during TechStars, I got some really good mentors around us to say, hey, you got something here. If we have some outside capital, we could really accelerate where you guys are going in a much quicker time, right? So at that point in time, we actually did a little small friends and family round. And then right after TechStars, a guy by the name of Jeff Weiner, who is the ex-CEO of LinkedIn. TechStars does a great thing. They connect you with people. And I got connected with him. He led our seed round. And that's really kind of one of those, you've got several inflection points in an organization as you grow and build and scale. That was one of those inflection points. So took capital from him and some other Chicago-based VCs primarily. And that's what kind of got us to that next milestone, how do you get from 0 to 2 million in ARR, right? And then Mike and Jeff connected us with you at High Alpha and the folks at Jump Capital. And that's when we raised a larger round in the summer, our Series A in the summer of 2018 in there.
Yeah.
So that, and then last year we did a larger B. So that's kind of the funding arc that we've gone through.
Yeah, Matt, I'm curious, you know, when you when you're exiting TechStars and some of the mentors are saying, hey, you've got an opportunity here to raise capital, was that an easy decision? I mean, did you know, hey, that sounds good, we want to go faster? Or were you and your founders, did you even consider, hey, let's continue bootstrapping this?
We did. I mean, it wasn't an easy decision, right? The best capital in the world is capital from your customers. And we had some good customer traction going in those early days. I think ultimately what we said is, you know, and it's a cost benefit analysis, right? What are these investors going to do for us outside of just capital? You know, capital, if you've got an amazing business, capital is pretty easy to come by, honestly, for a whole host of reasons, right? If you've got an amazing business, in theory, you've got a lot of customers that are paying that off, right? If you have an amazing business, you've got a lot of investors that want to invest in you. So ultimately, we ran a kind of a cost-benefit analysis and said, hey, getting some strategic folks who are true operators that have been there and done that before and can help us scale the business. The three co-founders, we've never built a business before, right? So we really optimize for getting folks around our table that have been there, done that, and can help us avoid, especially early on, the pitfalls that we were going to potentially fall into to accelerate the business much faster. So it wasn't just the decision to take capital from outside sources, dilutive capital, I should say, wasn't just about the money. It was more about the people that we would be able to put around us as we build out our board of directors, our board of advisors, and what those people can do for us from a mentorship perspective.
Yeah, that's good. That's really good, Matt. I know one of the themes of this event is talking about what happens in the Midwest. Did you meet with or speak with any early stage, you know, angel investors on the coasts, or was the focus really investors in Chicago that you thought could be helpful?
Oh no, I mean, we spoke with coastal investors. I spoke with anyone that would want to talk to me, and I think that's part of kind of your job as a CEO as you're going through, you know, taking on capital. It's really you need to get yourself out there, right? Early days, you are the brand as the CEO of the organization, and so you have to find investors that really kind of, to me, there's really three core areas. One is alignment. I need to be radically aligned with this investor from what success looks like from an outcome perspective, right? If success to me is a $100 million exit and success to them is $1 billion entity, you're going to be very misaligned, and then board meetings are going to be tough. They're going to be hard. So you have to be aligned. How you build the business, aligned on that. Is it growth at all costs, or is it, hey, 100% year-over-year growth is great, and let's make sure we watch our burn and watch the bottom line in there. Aligned on additional capital, right? Do we want to take on additional money? Do we want to take on debt? So that's one. Two is values, aligned on values and this is really where I really optimized on finding operators that are now investors, because they can empathize with you. They can say, hey, you know, if we missed our yearly target by a little bit, we should still bonus our entire employee pool, right? And by no means am I saying that traditional investors who only grew up in that space would do that, but I've definitely had some conversations like that. So aligned on those values. And then honestly, lastly, you're looking for a partner, you know, especially in those early days. You're looking for someone that says, guaranteed things will go wrong. You will miss forecasts. Product will not get shipped in time. And again, for me, it was finding an investor that understands that has been through that, that has gone through those slogs before, that can empathize with you as you're going through that. That was a big part. And I think a lot of those values, and again, not saying that they're outside the coast, but a lot of those values are wrapped up in a lot of the Midwest venture firms that I talk to.
Yeah, that's good. That's good. So particularly as the company grew, you got past that the kind of the seed round. Business is doing well. You've now got choices, right? And I know firsthand, I get phone calls from other investors saying, "Hey, can you introduce us to Matt and the team?" I mean, that happens frequently. It's always a good sign as an investor when other people are that interested in your business. Talk about balancing your operational role as a CEO, which I obviously take very seriously, with the more strategic role of building relationships with people that may do your Series B or your Series C. How do you think about that just in priorities?
For sure. Well, first of all, I think my job as a CEO is make sure we never run out of money, right? Largely that's let's talk with our customers or potential customers, but it's also potentially investor money. It's about hiring amazing people, and then it's about setting the direction. So a big part of my role in the organization is exactly what you just talked about there, Mark. And as you go through different stages in life cycle of your company, how you do that changes a little bit. And let me tell you what I mean by that. When we were, TechStars or just over TechStars, and I honestly still do this to some extent today, I would take a meeting with anyone, at least an initial meeting with anyone that would want to talk. And then you build out a CRM and you track that just like you track a prospect in there. So you know what the conversations are, you know what their thesis is, you know what type of checks they write. And honestly, over time, you get a really robust CRM of investors. And then what you do is you got to keep them up to date. And it's really hard to do that on a personal one-on-one level. So what that means is you got to find some way to basically optimize yourself. How do I talk to 3, 4, 5? I think I have 780 investors in my CRM right now. How do you talk to that many investors in a very quick, like one brushstroke, which is you send out a monthly letter to them. So and we were very open and honest and transparent. Obviously, the business was going well, so it's easier to do that when the business is going well. Just about all of our metrics, who we are, customers that we're getting, and like clockwork, it would go out every single month. And what that did is it kept all of those people that I had maybe literally just talked to once for 35 minutes and told them kind of the quick elevator pitch of LogicGate, got them up to speed on a consistent basis, month over month over month, about what we were doing. And then you know what happened? We got unsolicited term sheets from those things, right? So that's how you kind of manufacture the ability to, I think, see a lot of people, hear a lot of people, and spend the vast majority of your time operating and building the business. And then, again, you got to build up your repository of people. But as you do that, once you do that, you then can send out this monthly note, and it kind of just takes care of itself from there.
Yeah, that's good. It's fun to hear you retell the story, Matt. And obviously, you've executed that strategy really well. One other question would be: you shared your background, right? Great run as a management consultant, and kind of learned this domain. How did you learn and have the confidence to kind of execute the plan that you just described, right? I mean, this is I haven't been in management consulting, but I can't imagine that they actually teach you how to raise venture capital for your software startup. So where did the learning come? Were you reading? Were you talking to people? Maybe share a little bit about that.
Yeah, I mean, a lot of it came from my early mentors, right? There's great books out there. Venture Deals by Brad Fells talks about this a lot. TechStars gave you some good information on that. A guy by the name of Troy Hennicoff, who was the managing director of TechStars Chicago, when I went through it, he would basically demand that we sent out a weekly update email to TechStars. And I just took that concept and expanded on it. And that was the groundwork and the foundation for what we did, frankly, probably what I did for the next 4 years. Now that we're at the stage that we're at, I don't send out those monthly emails anymore, right? It's more of a quarterly update. and it's a selector group of investors that get it. But in those early days, you want everyone to know about what you're doing, and it's how do you scale yourself? That's really what you want to do. You know, and again, take any meeting that in the early days, take any meeting to talk with anyone at any level within an organization just to get in, and throw them on that listserv, and then just have a very clear, concise update email. Because, and you know this, investors don't invest in you at this point. They invest in dots over time to see the trajectory and the traction. So you need to continuously give them that dots. You need to continuously make them be top of mind, make your organization be top of mind with them. And that's what that investor update letter did. And I can assure you, if you're spending the majority of your time building your business and you build a big, amazing business, capital will come. Capital is the easy bit.
Yeah. No, that's good. That's good. Maybe one last question, Matt, is just talk a little bit about how you think about your board. You know, you've mentioned how you're prioritizing different investors' backgrounds. You talk a little bit about finding people with operating experience to invest in the company. As your business has gotten bigger, now a lot of that comes from your board, and your investor roster have some good overlap. But you know, talk a little bit about the what you're trying to get from your board, how they're serving you, how you're working together.
Yeah, for sure. So I think about building a board like building a football team, right? It's like building a sports team. You want linemen, right? So you want someone that's really good in finance and has those chops and has been there. So we have someone on our board called Mike McMahon, who is the ex-CFO of one of GE's arms, right? Really good with that finance. You want a marketer on it, right? You want those wide receivers out there, which is you, right? Coming from that background. You want you want the voice of the customer on that, which we have an independent, right? A quarterback that really can tell you about kind of what's actually going on and what they're hearing about. So you want to build your board and your extended advisory board like a sports team, where you've got different people playing different, very specialized roles. And those very specialized roles then can help you make, honestly, at the end of the day, it's really, you know, it's the ability to help you and the company make the best decisions possible.
Yeah, that's good. That's good. I would be the I'd be the slowest wide receiver ever, but I do appreciate that that you called me out. That's good. Thank you, Matt.
I love it. I got one question for you, Mike.
Yeah.
What are those kind of Midwest traits, those values, those characteristics that you guys at High Alpha look for when investing in companies? Yeah,
Matt, I think most venture investors get asked this question quite often. The stage that we're at, which is, you know, seed and A, it is very much about the team. We like to believe we've got a crystal ball and can understand how a market is going to develop and whether there's opportunities to create a category or be a leader. The reality is, in our experience, there's going to be a lot of turns left and right, and a good team and a team that won't quit is the first hurdle for us. And we spend a lot of time trying to get to know people. So there are a lot of things you can look at, but I would say that the team is most important. That's one of the reasons that we love being in the Midwest. You know, we don't try to build, and LogicGate's a great example. We're not trying to build or invest in the best Midwestern companies. These are world-class companies that compete globally, that happen to be based in Indy or Chicago or, you know, Wisconsin or whatever. So it's a secret weapon, and we like it, and we use it to our advantage.
Love it. That Midwest grit.
There you go.
Awesome.
Look at that. We landed right on time, didn't we?
We did. You're on mute.
Matt, thank you very much for your time. It was great to see you, and you did a nice job.
Thanks, Mike. Appreciate you asking the easy questions.
Can you hear me now?
Yeah.
You're back. I
Awesome.
thanked Matt and Matt thanked me. So I think we're good. You can stay on track here.
You guys closed it out perfectly. Yeah, really appreciate all the nuggets. I love hearing the story from both perspectives, Matt. It was amazing to hear just how you've scaled yourself, how you keep in touch with all your repository of investors. And Mike, it was phenomenal to hear about the characteristics you're looking for. I think that you guys hit it on the head. This is, you guys are world-class companies, investing in world-class companies. Doesn't matter where they're based, whether it be Indy, Chicago, Iowa, they're building world-class companies. And so thankful for having you guys on today. Really appreciate it.
Yep.
Yeah.
Thank you.
Yeah, absolutely. And up next, we have someone from a worldwide company, Amanda Getz from the Not Worldwide. We'll be talking about personal branding 101, building the foundation, coming at you next.